We need something that is a neutral reserve asset, because I think the way Keynes described it during Bretton Woods, and I've heard the IMF say that several times. So I guess it's about the world moving to a neutral reserve asset that isn't controlled by any country, and you think that's going to be gold. So I think that's your end game. Can you go ahead and maybe give us your version of that?
Yeah, I think at least in the intervening term, it's gold. I mean, it could. There's no reason it couldn't also be Bitcoin, something like Bitcoin. But that's right now, gold's on central bank balance sheets. Bitcoin isn't. So we'll see how that develops. But I think when you look at the combination, the fundamental problem is that in order, peak cheap energy combined with the sovereign balance sheets of the world, in particular the West, and in particular the reserve currency issuer US, means that in order to keep treasury bonds, and we'll pick on treasuries because it's the reserve currency issuer, Europe has some similar problems, but to keep treasury bonds nominally AAA rated, you can't, by definition, keep them AAA rated on a real basis, particularly in oil terms, right? So basically, peak cheap energy means it's getting more and more expensive to grow and find the marginal oil barrel. That's likely to continue. And while there are some alternative energy things we can do, the fact of the matter is oil and gas are still, 70-80% of our global energy consumption. And that's not going to change in a time horizon that I think is relevant for this discussion. So oil is going to keep getting more expensive if you take out sort of, cyclical moves, right? So oil is going to rise, which means treasury bonds, particularly with rates at 0 or 25 basis points after today, I suppose, are going to lose value against oil just on the geology of oil alone.
Right.
Then when you take into account the sovereign balance sheets of the West, the US specifically, you have the situation where they can't afford to let rates rise very much to compensate you for the rising energy costs. And so they're going to have to basically at some point grow their balance sheet to, they have to keep real rates significantly negative. And we've seen that. And you and I talked a year ago and I said, look, I think real rates are going to at least -5, maybe -10 or 15. And people at the time were kind of laughing. And of course, they're not laughing now. Here we are, -8. So it's this fundamental problem where to get the West out of the problem they are with their debt load, particularly in the context of a peak cheap energy world, you've got to have significantly negative real rates, but that, and particularly in energy terms, but that doesn't work if you're a creditor. That means basically you have an ice cube of savings that's melting away at 8 to 10% per year in energy terms, which really matters because if you don't have enough energy, you're going to starve, economy collapse, a whole slew of bad things that political leaders will do.
Luke, why don't you give an example of a country that would be applicable to? Because I think that'll help the listener kind of get their mind around what you're saying. So if you're a country, I think the way you termed it with Grant is if you're long dollars and short energy, then
you're China.
You're holding onto those dollars in treasuries. And if the treasuries have a negative real yield, then your purchasing power or how many barrels of oil you can buy with those treasuries is decreasing, and that's bad news if you're a Japan or a China.
Japan, China, Europe, and quite frankly, it's bad news for Russia too, right? You sell a bunch of oil today at 100, and then in 10 years it's 400. You would have been better off just leaving it in the ground because you're not going to get compensated with interest with rates at 0, and the U.S. can't let rates rise enough to do that. So that is both sides of the coin. It doesn't work for anybody. It doesn't work for the U.S. middle class or working class. It only works for sort of this narrow set of interests that are closest to the dollar system. So I think what we're seeing is the system feeling itself out, the different players trying to enforce their desire to move to a system with a neutral reserve asset, right? Because at the end of the day, gold is just a 0% yielding bond, right? Okay, so Treasury is 0% yielding bond, gold is 0% yielding bond. Gold is infinite duration, Treasuries finite duration. Gold is finite issuance, Treasuries are infinite issuance. and gold has an infinite face value, and Treasury has a finite face value. And you could use apply some of these same things to Bitcoin, and it's even more attractive, I think, on the issuance side than gold is. But the point is that in the situation where we are with energy, with sovereign debt where it is, you need to move to a system of the neutral reserve asset. And if you don't do that, volatility is going to rise, and the system's going to you're going to increasingly see commodity producers decide, I'm just going to leave it in the ground. I would rather have oil than treasuries, so I'll just leave it in the ground. I'll take out what I have to take out and to pay my dollar debt, and anything else I'm going to leave in the ground, and the system will break down.